Hi, my name is Steve Harrison. I'm the owner and I'm an enrolled agent with Capital Gains Advisory. And we're going to do a small presentation on starting a business entity selection. The purpose of this presentation is for prospective clients who are thinking about starting a business. We want to go over some of the things that can help them to make the right decisions early on and avoid traps that can take place later on. But before we get started, we do want to mention our safe harbor. The information contained here should not be relied upon as definitive tax or financial advice. Always consult with your accountant and or financial advisor. And for this particular presentation, we'll add and or an attorney who's qualified to give you legal advice. We are accountants, we are financial advisors, we are not attorneys. And even though we may be your accountant, your financial advisor, you should speak with us before acting independently on anything you see here in this slide. So we have really four basic objectives. We want to talk about legal entities, tax entities. We want to talk about some considerations, and then we'll do a brief review of what we've learned. Let's start by talking about legal entities. Now, what is that? Well, what the legal entity is, when you go to the Secretary of State, you register your business and you choose an entity. Now, you may choose a sole proprietorship. You may choose to be an LLC. You may choose to be a corporation. You may choose to be a limited partnership, a general partnership. In some states, they have professional companies. These are all examples, as you can see here on this part of the slide. Uh, these are all examples of legal entities. And it matters because your legal entity affords you certain protections, but it also requires certain actions to be taken by the owners. And if you don't do those actions, you may lose said protections. Each entity, depending on the state you are in, will have its own legal requirements, and you need to know what those requirements are. You need to know whether you need to have legal documents, whether you need to issue shares, whether you need to hold meetings, and if so, how frequently. So these are all some things that come into your legal entity, and the purpose is, again, it's a protection for you and your business, and so that's why we're looking at registering it as a legal entity. But now let's jump into tax entity. This is really more what we're focused on as accountants. What is a tax entity? Well, you do have your legal entity, and your legal entity will default into a tax entity. However, your legal entity is not the same thing as your tax entity. These are separate, and you have the right to choose your tax entity. And should you do so well, it can save you time and money. But should you do so poorly, it can create tax straps or it can be drains on your cash flow. So let's go ahead and we'll talk about four basic tax entities. There are only four, at least for general purposes. Trusts, we're not going to get into that because generally you're not going to operate a business in and of itself as a trust. A trust is a layer where a business will operate through. But a sole proprietorship, let me rephrase that. Let me just back that up a little bit. Trust is not an entity where you would generally operate a business through. However, there are people who have been stuffing LLCs within trust to operate certain businesses. We're not going to get into that. That's a very social media type thing. That's not what we're here to talk about today. We're just trying to do a simple presentation that will affect most of your basic small business owners, whether it's a store, whether it's a service business. And generally, for those, we're going to look at four different types of tax entities. The majority of people will be sole proprietors. So what that is that is a business that has one owner and that has not elected to be a corporation for its legal entity. So if we jump back a couple slides, remember we talked about limited liabilities, corporations, general partnerships, limited partnerships, professional companies. If you elect to be a corporation, you will never, ever be a sole proprietorship. However, if you are a limited liability company, the most popular entity, you by default are a sole proprietorship, assuming you only have one owner. Coming back over here to the slide, sole proprietorship, any business with one owner that is not a C Corp or an S Corporation, which basically means if you are a sole proprietorship or you are a single member LLC, because we're talking about one owner, single member, then you are a sole proprietor. A partnership, that's another tax entity. Any business with more than one owner, so we're talking about two or more owners, that is not a corporation. By default, you are a partnership. Now, just because you have multiple owners within a business, let's say a multi-member LLC, doesn't mean you can't elect taxation as an S corp or C corp. And so that's why we say that is not a C or S corporation, because you can make the election to do that. So as corporation, any LLC or corporation that elects and meets the requirements for S corp treatment. C corporation, any corporation that has not made an election otherwise. So if you are a corporation and you don't make an election, you default to C corp. So C corp, partnerships, and sole proprietors, they all are defaults. So there are default entities that go to that. S corp is never a default. You're only an S corp if you elect to be one. Maybe that's the simplest way of remembering it. So if you're a corporate entity, you're going to be a C corp. If you're a non-corporate entity, chances are you're going to be a sole proprietorship or a partnership, depending on how many owners you have, unless you've elected otherwise. Each has its own rules, benefits, and disadvantages. This is why you should not take advice on social media. Rather, you should consider carefully what are your goals, what is the size of your business, what is the nature of your business, what will you be doing to earn a living, and then you should also consider what are the costs of doing business in the area that you live in. And this jumps into our next point, considerations, right? So why it matters, again, type, size, and purpose of your business may be benefited or harmed by the wrong legal or tax selection. So let's give you some examples. So in certain states, let's say you're a doctor, if you elect to be an LLC for your doctor's office and you have more than one doctor, you are actually putting yourself at risk. The reason why is that certain states do not allow doctors to escape liability via an LLC. So, what those doctors will do instead, most of those states will allow them to escape liability, at least from the mistakes of other doctors, via some sort of partnership, like a limited partnership or an LLP, a limited liability partnership. Um, so, depending on the state you live in, the rules are different. So, you need to know what business structure offers you the best level of protection relative to the cost, the expense, and the requirements for you to maintain that legal entity. So, again, we're thinking about your legal protection. On the other hand, let's say that you're a tech guy and you are starting a software company, and your plan, you have an exit plan. You want to sell your company later on down the road to venture capital. This isn't something that you want to do forever. You're not trying to be Google or Microsoft. You're just trying to make a nice product and sell it out to some, private equity firm or something. Well, then you might want to consider, and this is more of a tax question, but you might want to consider something like a C corp, um, because there may be some rules. In this case, we're thinking about qualified small business stock that would benefit a C corp. Also, if you are a real estate person, certain tax entities do not recognize gain on the distribution of property. So what that means, let's say you and your family, your parents, your brothers and sisters, you want to go in and buy a house. Okay, so you do that. And let's say you buy a couple houses, and soon enough, you've got a nice big old thing, but then there's a big dispute and you want out and you don't have the cash to pay yourself out. But what you can do is you can distribute that property. You can distribute a house out to yourself. Um, you don't necessarily have a taxable event. However, if this was a corporation, you cannot do that. There's a taxable event because you're distributing property. So again, you see how size and purpose it matters. Certain tax entities, talk about corporations, S corporations, they require the expenses of professional accounting services. Corporation, you have to show your books. As corporations and partnerships, once you get to a certain size, you also have to show your books. In the case of an S corporation, you have to run payroll from day one. As soon as you want to take money out that business, you have to have payroll, which means you have to pay $50 a month for some sort of payroll services. So this is why it matters. You have to think about what are the benefits a specific entity offers me and how can I tap into those benefits. So just to review, This is what we've considered today. A legal entity, this is the entity you select when registering with the Secretary of State, and it carries legal protections and requirements. Tax entity is the entity you either default into or elect with the IRS. There are certain tax rules and requirements, there's pros and cons. And so the considerations before selecting a legal entity, you need to consult or consider whether you need to consult with an attorney in your state. Before selecting a tax entity, you should consider speaking to an accountant. We want to thank you for your time today. If you have any questions, this is our phone number, 404-470-5055. My email is steve at cg-advisory.net. Our website, cg-advisory.net. We're enrolled agents, we're certified bookkeepers, and we're also registered investment advisor representatives here in the state of Georgia. Now, we'd be happy to assist you if you need anything, any assistance with determining what's the best tax entity for your business.